Hey guys, so in this video I wanted to do up a quick list of the advantages and disadvantages of investing in shares. And like previous videos, I'll break that up into two videos. The first one will just be the advantages of investing in shares, and the second one will be the disadvantages of investing in shares. So if you look through history, cash has tended to underperform a lot of other asset classes, and particularly in this modern world, there are a lot of indebted governments, and governments manage the cash within a society and currencies of a society. And there has historically been a tendency for governments, when required, to increase the amount of cash in a society to pay for their expenses and debts and whatnot. So historically, cash has underperformed other more tangible asset classes like stocks, commodities, property, agricultural land, etc., etc. A good example of that might be that currently in Venezuela, if you'd kept all your money in cash, you would have recently lost about 99.8% of its value, as the government over there recently started printing money to pay for the imports that they need to feed the country and whatnot. So, investing in things outside of cash tends to be safer in the long run. But if you were a Venezuelan and you had put all your money in the stock market has gone up in value as the amount of cash in the society has increased. That said, if you would have valued the Venezuelan stock market in US dollar terms, it's still fallen by 60% as a result of the economic problems they've had. But the point is that you would have outperformed cash. So, the disadvantage of investing in stocks is a diversification away from cash. That's not to say you don't have any cash, it's just to say that you don't want all your money in cash all the time. One of the advantages of investing in stocks is the low capital requirement it takes to begin investing in stocks. So practically speaking, you probably only need about $1,000 and you can start investing in the stock market. The low transaction costs of investing in stocks. So in these modern times with technology and the internet, trading stocks can be as cheap as $1 per trade, or practically speaking with a lot of online brokers, you can pay less than $10 to exit or enter a stock position if you're doing it in a small amount, like less than $10,000. So that's fairly cost effective for most people relative to selling property or selling a small business or some other sort of investment, which tend to have a much higher fees in terms of brokerage and marketing and all those sort of things that are required to sell one of those assets. Stocks are highly liquid, so stocks trade on the stock market every day, particularly the larger companies. If you're investing in a company that's worth over $1 billion, you're going to find that typically if you've only got a few $1,000s invested in that company, you can exit your entire position in a day or in minutes without moving the price, and you just get the market return on that day. So it's a highly liquid investment. Stocks are also a managed investment, so in that you're buying a company that already has a management team in place, board of directors, the assets that they use, whether that's factories or land or whatever. So, and you don't have to actually do anything other than review the company's financial performance and their plans and the industry and things like that. So your investment is completely managed for you. You can buy the stock, and there's nothing further for you to do except collect the dividends and decide whether it continues to be a good or bad investment. Investing in stocks gives you both the opportunity to get a return on your capital as well as increase your capital, in the sense that if you buy a stock that is good at investing shareholders' capital, they can get profits that they can reinvest into that company and grow that capital over time. So in addition to offering a cash flow in terms of like dividend payments, you may actually find that your capital increases over time, or the share price increases over time. So that's one of the main advantages of investing in stocks. Stocks have also been a good source of cash flow historically. They tend to pay between 2 and 5% dividend yield across the whole market. And you can find individual stocks that have a varying degree of cash flow that they will distribute to shareholders on a annual, biannual, quarterly basis, or whatever the board or management decide for that company. So cash flow is one of the major advantages of investing in shares. Another advantage is volatility. Now, volatility is a double-edged sword in that if you're a good investor, volatility is your friend in that it gives you the opportunity to buy depressed assets at when the market is selling them off, and allows you to invest in companies that hopefully produce a good return on investment and are a good return on capital. You just get the opportunity to buy them while they're cheap because other people are selling for whatever reason. Maybe that's economic, maybe that's political, maybe that's financial reason that these are selling off. But yeah, so volatility allows you to pick up some bargains. The next advantage of stock markets is fast price discovery, in the sense that because it's a highly liquid asset and there's lots of participants in the market, you can find that if you buy well, stock prices, if you've got a reason to think that a company is going to perform well in the near future, you can find that a stock price can go up quite rapidly, in the sense that you can get 50, 100, 200% return on your investment if you buy cheap and in a company with good prospects. Whereas in some of more mature markets, in property or bonds, you find that the capital appreciation is a lot more subdued. So there's very fast price discovery in the stock market. On the flip side of volatility, there are also a lot of companies in the stock market that are very large and have a very big presence in an economy, and so as a result are fairly stable and consistent earners of returns on capital. So you can be thinking like utilities or some things that you can put your money into that as an investment, and it's a fairly stable company in terms of both price and the cash flows it generates. On the other side of there being large companies in the stock market, there's also the opportunity to invest in small niches. So in companies that you would never personally think of starting up yourself, but you may have an interest in investing in them, you can get very focused investing in rather small companies that have the potential for rather large payoffs and that are very unique and beyond your own skill set. So you might not be willing to start up a lithium mine, but you might be interested in investing in lithium and lithium mining. And the same could apply to investing in a hotel if you're bullish on tourism. So yeah, stocks give you the opportunity to invest in small niches. Another advantage is that most financial institutions are willing to offer you credit or debt or margin to leverage your investments in stocks. So if you have a high conviction investment thesis, you're able to borrow against your own investment in a stock to increase the leverage of that investment. The advantage of leverage is you can increase your potential upside, but obviously there's risk to the downside if you're wrong about your investment thesis. Investing in stocks can also provide tax advantages in that many countries around the world don't tax capital gains the same way they tax income. And they also, if you're using interest or borrowing money to invest in stocks, interest can be tax deductible in many countries. So there are many tax advantages to investing in stocks beyond keeping your money in cash or small business. Stocks also provide you the ability to short the market, in the sense that you can actually bet against stocks where it might be more difficult to, most people aren't willing to lend you their house so that you can sell it and then buy it back in the future and give it back to them, which is basically what shorting is. Stocks offer you the opportunity to bet against everyone else. Another advantage of stocks is that you can use them as collateral for other loans. So if you've got a stock portfolio but you'd like to buy a house one day, you could potentially go to a bank and say, hey, I have a $300,000 stock portfolio and I'd like to borrow money to buy a home and use this as collateral for that investment. So stocks can be used as securities for loans, which you can't really do with a lot of other alternative assets or less mainstream assets. And finally, one of the advantages of investing in stocks is that most people are in the business of selling their labor. So we work for companies and they pay us an income. But if that company was to one day work out how to do what you do for that company in an automated way, which would increase their profits but might not necessarily leave you with a job, if you had money invested in that company, the increased profitability of that company might offset the fact that you just lost your job. So that sounds terrible, but the idea is that you can diversify away from just selling labor and start selling your capital or loaning your capital out so you can get a return on your capital as well as a return on your labor. So if you have any other advantages that I haven't mentioned, leave them in the comments below. If you have any questions, leave them in the comments below. Otherwise, if you'd like to see more videos like this, subscribe to the YouTube channel.